Good evening, all. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up for a very historic, and this is historic, it's a March 30th, 2023, and it's historic because President Trump was indicted by the grand jury. Charges will be filed. They've been sealed. He could be arrested as early as tonight, tomorrow. They'll work that out. Can you imagine him in handcuffs? Can you imagine the mugshot they have to do? They'll probably put him into a cell. I hope they put him in a cell with everybody else. Should be treated no different, right? Can you imagine what that makes for the press, okay? This is his dream. Yeah, his dream is he needs to be back in the press every day. And it's just been gradual. That's over, all right? The Democrats have just given him the floor for a very long time. They have just radicalized all his followers. They have been after him since 2016. That's fact. They tried impeaching him twice. That's fact. They're still going after him on the January 6th case. That's fact. And a low-hanging fruit, the district attorney in Manhattan on a Stormy Daniels hush money case got an indictment by the grand jury. It's the weakest of the cases. Now, there's a positive and a negative. Obviously, if he's found guilty, okay, that's a positive for everybody that's anti-Trump. Pro-Trump, what if he's found innocent? Can you imagine what then happens? Number two, we're a long way off from the election. He's entitled to a speedy trial. If I'm the president, I'm pushing for that trial fast. Every day he's in front of the press. So it's what we're dealing with in America, pro or con Trump. Doesn't matter what you are. This is what it is. This is Democrats doing. It is their end result, good or bad. If I'm them, I hate what just happened. That would be me. Let him die quietly if you don't like him out there. Quiet for him is never quiet. This is a whole different element now. That's my take. All right, tomorrow's an important day when we look at the markets because the Fed's going to get its favorite set of numbers. They're going to be looking at personal income spending and the PCE index data. So where's the core PCE? What's inflation doing with it? How's it working? That's a big piece of data for them. So this will give them an idea. The market expects it to still be elevated. So I don't think that's falling. We're hearing from more and more of the Fed people, and they all seem to be along the lines that they're not through fighting the inflation. It has become sticky. They have to keep going with it. We're hearing worse things about vacancies happening in big cities in office space. I mentioned yesterday the good news in Chicago, we're going to convert some to housing. In New York, they're saying 16% vacancy rate now. That doesn't include all the sublease space that's for rent, and there's a ton of that. So the problems are there. Getting people to go back to work, difficult. I went today for a checkup and had to wear the mask again. So the first thing you see is if I'm wearing the mask and you go in there telling people, oh, COVID's gone and all that, then why are the hospitals making you wear the mask? So that's the first logical thing. I also went today and got an estimate for a haircut, and tomorrow I'll get one, so I'll be beautiful for you very shortly. So we look at Disney, and Bloomberg was carrying talk that maybe the right bidder for this company, I didn't think anybody was going to bid for Disney. I didn't know they were for sale. Even a hostile takeover is Apple. The logic of it, I was thinking about during the day. I see good and I see bad. Number one, does Apple really want to be in this type of an entertainment business? It's one thing to be in the streaming business of your TV station and you're producing movies. It's another to have all the parks and all the other part of it. Maybe it is a good thing. Maybe this gets them away from just being, and they don't want to be a one-trick pony. Maybe that's it. I don't know. But certainly Disney was up on part of that news today. You can see how the chart looks. The swing line's up, higher lows, higher highs. That's bullish. The market is over the 18-day average. That part is bullish. Where could the market be headed? The combination of the Bollinger Band, which is right above you at 98.10 to 99.27. I'm sorry, to 99.27. It's not 98.10. That's the Bollinger Band and the 200-day average. So it's in between here. Those two numbers are where I think the market could be headed. But you're overbought. So it's nice that you got a pop today, but I think the pros were taking money off the table. Now, if it turns out that they are being chased by Apple, why can't you go back to this number? I don't see why not. But it's one thing to talk about, another thing to actually do it. Schwab is nothing but trouble. I explained yesterday in detail how banks work and they have securities on their books. They go, no, we're holding them to maturity, or those they're holding and they might sell them. And how, unfortunately, if I'm a bank, I'm putting everything on, I'm going to hold it to maturity, and you peel it off when you don't need it. Well, the market's realizing this about Schwab, and that's the punishment that's happening. Remember when it got down here, I said, why is it not bouncing? It's a great brokerage company. I was talking, well, now I understand the issue that they're having. I don't know how big of an issue it is, but the market thinks it's important. When you take out yesterday's high, not today's, yesterday's, go back to that, the 52, let's say 55.24. If you take that out, you negate this minor downtrend that's set back in, and maybe you can get back to the 58 level. If this picks up momentum and people believe what they're hearing and things are getting worse, you're opening the door for 44.74. So it's important. In the gasoline fund, I'm looking for a pullback in the market. You're overbought, but I'm going to repeat. I think the spring-summer play has begun. I don't think you're visiting this number again. I think you're on your way for the spring-summer months. In Tesla, can the market get itself back up over here? It's overbought. It's not of interest to a chartist like me. I think you're also caught in sideways action of the Bollinger Bands. So no, I'm not in love with what I'm seeing as a chart there. In XLF, the financial services, couple of things. First, you lost the bearish embedded reading. This is an embedded reading. If you lose it by the red number closing over 21, you got to be out of shorts. That's what I teach, because you're probably going to go to the 18-day average of the closest main moving average. You see that? Let me come back. I hit the wrong button. Look what you did today. So it was right. That's what I teach in the Bollinger Band course, how to catch the other part of the trades when momentum's lost. It could be on the bull side or the bear side. It's fascinating. You came down in XLI and you had a very successful test of the 200-day average. Now you're testing the 100 with the 18. I think this is where the market gets some brakes put on it, so be a bit careful here. In stocks, everybody wants to own the tech because of what? Not just the technology. If interest rates are going to pause, these companies come alive. They're very cash intensive, and therefore the size of what interest rates are becomes intensive. The banking system, though, has been hurt. It's been hit between the eyes. It's got a big black eye. Getting money out of their banks isn't the easiest thing in the world, the cost of money and getting a banker to give it to you. In the home builders, I'm seeing that the mortgages are back in the 6.3 area, 6.4 area. Depends where you're looking at, but they've come back down. They're not back to the 6.12 area, but they're certainly back down at numbers that are attracting buyers. I mean, I believe that that's it. And you don't have more supply coming on the market. So the home builders, we had this break into the 100-day average in the lower band, and suddenly it's back over the 18-day average. It's not trending yet. It's got a higher high, lower low. You know what this whole action is you keep hitting the 18-day average and sticking in there? You're winding up like a pipe, and you put a spring in it, and you're winding it until it bursts out one way or the other. That's what I think is going on at this point. In the energy sector, need I say that the market momentum is up? You had your big break. The market's back up, fighting resistance again at a key number. This 200-day average stopped the market here. You fell back. Now, can it get over it and stay over it? I don't know. This is neutral land as far as I'm concerned. In the gold market, what bothers me is we're staying overbought, not embedding. The chart action on its own is still very bullish. The better play is silver, by far. It has the embedded reading. It's the one marching against gold, and that's the one I have been telling, I don't mind telling you, my subscribers to be in. I'm talking to people that join me in the morning for my meeting, and I want you to do that. I want you to join me. we have a ball. You know, at 5:15, I start recording 40 charts on futures. And then in the 9 o'clock area, I do all the ETFs and I rotate stocks all the time. I think you'll like it. You can write me, ask me questions. I answer them. Some of you then can say, hey, would you do this? And instead of me writing you back in certain ways, I like to create a 1-minute video of what you're talking about and give you my answer that way, or a 30-second one. It's very effective. I think you'd like that. Also, if you like these videos, you know, you got that freebie. It doesn't hurt you on your clicker to move down and give me the thumbs up there. But as long as you're staying embedded, I'm bullish. And this is good, and so is COPX. Now, copper got up to the upper Bollinger Band. Do I tame myself? Absolutely. If you were sitting next to me, you get the elbow in the rib, and what happens? Get out of your long positions. Why? Because you're attacking the Bollinger Band the way you've done here and other areas, and you're not embedded. It's one thing if you're embedded until you lose that, like you did here. You want to stay long. You don't know where it's going to pick up and run. This is a different case. Could it go higher? Of course. But 95% of the time, I'm not making the number up. It's a mathematical number if you understand Bollinger Bands. 95% of the time, the market will trade within the bands. So when it hits a band and you're not embedded, it's a logical time to take some money off the table. That's what I teach. Doesn't mean I'm right. I believe I am. Pretty often because of the math of Bollinger Bands. It has nothing to do with my brain skill. The algorithm does that. Go read about it, read the formula, understand it from the other mathematicians. I just espouse what they created, and I love it. In TLT, we had a market that had bullishness about it, and suddenly, over the past 3 days, it's gotten under the 18-day average, which means the trend is down. Lower highs, lower lows. It is instantly oversold, finding support against the 100-day average, but it tells you, even on the 20-year, that the premium is going to come back a little bit. So all that premium we took out of the market, which caused this market to rally, that's what it would be, as you're losing the premium of the yield, that will climb. It's gradually coming back in because we're now starting to get into April and everybody will be talking about the May 3rd FOMC meeting. And, you know, depending on the data, another quarter-point hike is on the table. It can flip either way. You know, don't go to the CME Group page a month and a half ahead of time. Doesn't tell you enough. You'll see every day it changes. Who likes what? You know, it's like handicapping hour by hour. In the dollar index, that's why I'm doing my report. So wait for me over the weekend. You're going to love it, okay? When we look at FXE, away you go there. You know, more that I looked at that, maybe I should include that this week in the report. Why not? That might be very interesting. Just realized it. I was doing it on futures, but I can add UUP into it. And that'll be something for everybody. So look for that. I told you I'm going to do more of these reports. My first one will be tomorrow. I might even do another one over the weekend. I want to get more and more of these out. I think they're so important. And they're not always for a special situation. Sometimes it's just to reinforce what is going on. And I find that so important. And what's important is join me in the mornings. Come on. It's not my free video. This is where I'm unleashed. I can say buy, sell, do this, do that. I'll tell you what I've been recommending. We'll show it. You can keep up with it. It's not a track record. I'm not a CTA. I don't want to manage your money. I don't want to do any of that. You'll see my current trades. There'll be no yearly track record on there. Not about it. If I say buy now, I'll follow it to the end of that trade and move on to the other trades that are in there. And I think that's fair. I don't want to be a trading advisor. I don't want people calling me about their portfolio. I want you to call me about chart patterns, things like that. That we love. If you're a futures trader, you can trade through my futures company. I'll work with you. You know, that's different, but not in the ETF arena. I don't want to be a stockbroker again, and I was for a long time. I'm done with all that. This is what I like to do. It's so much more fun. This is what I always actually like doing about it. It was analyzing the charts because I think I got a good handle on them. Doesn't mean I'm great at it, but I think I have a good handle. So if you'd like to do this, join me. IraEpstein.com under the word research, or click up here. You'll see an icon. Go for that. I'm Ira. You have yourself a great day. I'll catch you all first thing in the morning.